Hello, YouTube. It's your boy, the Crazy Trader, and I'm here again with your favorite stock review. Like I always say, scared money don't make no money, and you always got to risk it to get the biscuit. Guys, I'm here with another review for Palantir. We did this like 2 weeks ago, and before the earnings, and now I'm doing something after the earnings. I know all the chatter has died down because of the earnings, and everybody is a little disappointed. Not everybody, but some of you are a little disappointed, myself included. Because why? I bought some calls on Palantir like a week before their earnings came out because I knew it was going to do good. I bought some calls, some about 5 or 4 shares, four calls, and before the earnings, it did pretty well. It went all the way up, and at the point, it was $26. $26, and I had the opportunity to sell these calls. I think I bought four, I sold two, I kept two of them, hoping that this thing will blow the market up, and I'm gonna reap a little bit and buy some more Palantir shares. But guess what? There was a rug pull. Whew, they pulled the rug under us, and then this stock fell 15 to 18% in a freaking day after the earnings. What happened? Did they fail their earnings? What happened? Did they not live up to expectations? They fucking blew the earnings out of the water. They did great. So why didn't people just jump onto it? Um, People thought their U.S. market revenue fell from 70% to 40%. God damn, you bunch of folks are greedy. They fell from 70% last quarter to 40% this quarter. So people started panic selling. 70% last quarter, 40% last this quarter. If you made a 70% profit last quarter and made a 40% this quarter, it doesn't mean you've made a loss. It still means you've made a profit. Are you freaking kidding me? What happens if Palantir signs all the companies in the United States and there's no more companies to sign? That means what? You're not making any profits anymore? God damn, you guys are killing me. Let's go down into it because I'm a little pissed. Um, you guys remember I had 350 shares because I had 400 shares. I sold 50 shares when the money doubled, and as soon as it started dropping, I bought 20 more shares. I'm gonna buy 30 more shares to get back to my 400 because I want my 400 shares, and my average cost is 1282. You know that already. You see, this is my call. It went down to zero. Two buys, two calls went down to zero. I'm pissed as hell because we blew the earnings out of the water, but I'm still pissed, because you guys decided to panic sell. That's fine. You gave me a bargain to buy. Let me take you through this real quick. When you go to nasdaq.com, they have a guru fundamental report for Palantir. I want to take you down real quick so we can go through the metric. Okay, profit margin pass, relative strength pass, compare sales and EPS growth to the same period last year. That's the fail. I mean, the EPS to sales, yes, I agree. Insider holdings failed. That I do agree. The insider holders are, some of them are selling, and they compensate their workers with shares. So the compensation, even though the compensation has fallen down for a very significant amount of shares, it's still very significant and relevant. So, but you have to have skin in the game. I understand what you're doing. If you want to be part of the company, instead of giving you all this money, they're going to give you some shares so you can have skin in the game. The more the shares go up, the more your value go up. So it's skin in the game. I agree. Cash flow from operations pass, profit margin consistency pass. I agree with all that. Research and development as a percentage of sale, they had it at a fail. I'm on a fence with that because even though it's not a new company, it's still a company that is still growing. So you don't expect, it doesn't have a static percentage of sales that you want to draw R&D money from. So the R&D can be stagnant a little bit. The money can be stagnant a little bit, but it doesn't mean they are not doing research and development at a scale that is way beyond the money that they have. Be careful. This is a software company. It's not like it's a hardware company where they have to be investing into hardware development and other stuff. So research and development, I'll be on a neutral. Cash equivalent with a pass, accounts receivable to sales pass, long term debt, equity pass, the full ratio, the PE to growth. That was a fail. I kind of agree on that. Average shares outstanding, it's a fail. Okay, sales. These people are not doing any advertisement and anything. So sales being a fail is kind of, they are doing AIP boot camps and stuff. Sales being a fail, I don't agree, and I'll tell you why I don't agree. Because they had a lot of sales. I mean, it depends on what you call sales. But I'll point you to one direction of their sales very soon. Daily dollar value fail. I agree. Price pass. Yeah, it's a good price right now, especially with that 18% discount that you got now. That's a good one. Income tax percentage with it's a fail. Okay, now let's go. to this article. This article is on Yahoo Finance. I encourage you to go there and read this article. And please read the whole article. It has so many gems in it. You would love it. It's amazing. And they talk about how they blew all they blew their earnings out of the water. They did so well, but still people didn't value you know they what they had because of the revenue that they had in the USA. So I want to read just a little bit of what is in there. So I'm going to read from the top right here. However, what grabbed investors' attention most was Palantir's US commercial revenue growth, up 40% year over year to 150 million. That marked a significant step down from 70% growth in it reported in the Q4 in the fourth quarter 2023. But a closer look at some of Palantir's key metrics last quarter tells us investors may be overreacting. That's why I want you to go through and read this, because this gives you all the ideas, like all yeah, so many gems are in this that you'll be surprised by it. And the numbers that they put out is great. So the US commercial revenue, it grew 70% last quarter, and it dropped to 40% year over year this quarter. So people are all, there's a crazy frenzy about it. They're like, oh, it is falling. No, it's not. It's still revenue. You can't be at the consistent 70% every quarter. That's not going to happen. You have to understand that there's going to be a dip, but at the end of the day, if the revenue is coming in, and it's revenue, I'd rather take some revenue, 40% revenue, than no revenue at all. So look up into it. It's great. I've always believed in this stock, and that's why that's why I still have an average cost of 12.82, because I've been buying this stock for a while now. I've been holding on to it because I believe in the stock, and I think Palantir is a great stock for us to hold on to. For how long? I don't know. AI is on a big rise. You can sell right now. I can sell and take my profit and just walk away. But I don't think AI is here. Some people say it looks like the dot com bubble. If it's a dot com bubble, that's fine. If this thing goes up a little bit more, I encourage you, maybe sell some, take some profits. Buy something else. Buy some. I'll make a review about some more AI stock. I have UiPath. I have C3 AI. I'll make some more reviews about them, and then we can talk about them. Anyways, I don't want to waste too much of your time. And like I always say, scared money don't make no money, and you always gotta risk it to get the biscuit. I'm out of your hair. Stay blessed, stay safe, and peace.